Thank you for attending today's webinar. My name is Aaron Carmack, CEO of Cardinal Services, and today we're going to be covering the Employee Retention Tax Credit. Now, I've heard the Small Business Administration refer to it as the ERTC. Somehow they dropped the T in that acronym. The same bureaucrats also started calling the QSEHRA as the QSERA, or its cousin, the ICHRA, as the ICRA. So just a heads up in case you hear this referred to as the ERTC. I'm going to be calling it the ERTC, which I feel is more dignified. So first, congratulations on making it through the pandemic. I've spoken to many of you that made it through unscathed, as well as many of you have made it through the many bumps and turns. Like all employment items, Cardinal has your back. We've partnered with you on the PPP loans, the different reports required with that, the emergency paid sick leave, figured out how to fund that so it wasn't showing up on your invoices. We've had triple the normal of HR and safety tickets, primarily due to COVID, and that's just the past 12 months. So the ERTC is one of those things we thought you should know about. It's a complicated, one-size-does-not-fit-all program, but it's potentially enough money that everyone should review to see whether or not they qualify. And like I said, Cardinal, like all employment things, wants to make this easy for you. Well, as easy as we can make it. So we're going to be covering the ERTC and going to review what the tax credits are, eligibility for those tax credits, qualified wages to calculate the costs, and your next steps. Now, the legal team always wants me to put in a disclaimer, and sometimes I think that they're trying to justify their existence or something like that. Sure, we're not a law firm, nor are we a CPA firm, and we don't represent ourselves as experts in the law, but for once, legal has a good point about demanding a disclaimer. The rules around this are being written or even rewritten, and we'll talk about why that is. So sorry to make fun of our legal team, but they're attorneys. Everyone wants to pick on the attorneys. So think back to the early pandemic. We're all eyeing the CARES Act programs in there. There are various programs designed to get you to retain your existing staff. That's exactly what the Payroll Protection Program was designed to do. Same thing with the tax credits. And if you got the PPP loan, then you couldn't get the tax credits. And the PPP loans were, and still are, a much better deal. So the tax credit's nice, but first you also have to pay taxes. So for most of us, these tax credits were backburnered, and they're backburnered for a good reason, which we'll once again get to. Well, there have been changes in the tax credits. You can now get the tax credits even if you had a PPP loan. And note that this is a refundable tax credit. There's nothing like having the IRS refund you money. Now, it's not quite as simple as watching this webinar and seeing a check show up from the IRS magically in your mailbox. But we're going to try to make this as easy as a process as we can. So there are three laws and really three sets of rules, but we're going to, for our purposes and for the presentation, we're going to break that out into two sets of rules, one for 2020 and the other for 2021. Now, there are two different levels of tax credits, but overall, they're very similar programs. So like I said, we're breaking this out into two different sets of rules by year to highlight the differences. Now, these are tax credits against FICA, but what they're tax credits against, it really doesn't matter because more importantly, you've already paid them and they're refundable to you even if you didn't pay that much to them. Now you're going to get your money back via Cardinal, and we'll get into how that'll actually work later. The fact sheet and this presentation, they're breaking out the rules based on the year. So note the time period for each. So March 13th in 2020 is when this began, the pandemic began for our purposes here under the CARES Act. Note that the different credit amounts on here, and also note that these are credits per employee. So it's up to the amounts per employee. So in 2020, there's a cap per year. In 2021, it's a cap per quarter. That $10,000, so $10,000 in wages, it gets you 50% of that for $5,000 per employee. But in 2021, it's $7,000. That same $10,000 in wages gets you $7,000. So a little more generous on here. So now if you have 10 employees, and several quarters, suddenly we're talking about a substantial amount of money. And you might be thinking, well, hey, Aaron, how do I apply? Well, it's not quite that easy. We have to first talk about eligibility. And you become eligible based on either the first reason listed under the year or the second reason. Now, the first reason on here is the same reason for both years. Full suspension of operations, that one seems pretty clear. The definition of partly, though, something we're going to need from the IRS. Now, they did some work on this, and if you look at the fact sheet, you can see that there's a link to it. You can see where they've defined it, had some FAQs, and then scrapped them because we had multiple laws come out for two new sets of rules, one for 2020 and one for 2021, that don't go into detail on what a partial suspension really is. So that's a real problem. Now, let's say you're a restaurant. You have dine-in as your primarily is all what your sales are, and you're partially shut down, so you can only do to-go food. That one seems pretty simple. But what if it's some part of your process that's suspended because of COVID? When does it move from trivial to a partial suspension on here? Well, you're going to be signing an attestation form to the IRS that this information is true, that the reasons that you really are partially suspended. And so take that 10 employee example, we could be talking anywhere from $100 to just under $200,000. That's real money that you want to pay back to the IRS. So you want to get that right. You may want to wait for clear rules on this. Regardless, if you are going to claim it under a partial suspension, you're definitely going to want to document why you qualify. Now, that first rule may not matter if you qualify for reason number 2. And remember, you just need to qualify for one of these two reasons in either one of the years. So a 50% drop in gross receipts compared to the same quarter in 2019, that makes you eligible for 2020. And you stay eligible until you rebound to 80% of sales. Now, that amount for eligibility in 2021, a 20% drop, once again, is more beneficial to the employer. And you can qualify in many cases based on the 2019 comparison or you can, in both cases, look at preceding quarters. There's a fact sheet with IRS rules on there. They made it very complicated, but the reason they made it complicated is they're trying to give you many bites at the apple, trying to figure out ways that you can qualify based on the rules. So you definitely want to check that out. Now, small employers in 2020 qualified for any of the wages paid employees, whereas the large employers, it was just wages paid to employees that didn't work. In 2021, the definition of small employers went over to 500. So now, if you're really close to that 100 or 500 number mark, once again, you're going to want to take a look at the rules, be very clear what the definition of 500 or 100 employees is. Is it full-time employees? Are we talking about full-time equivalents, etc.? Now we just have one box, same rules for 2020 and 2021, and pretty much all W-2 wages paid are qualified wages. So if your employee is paid $50,000 per year, those are all qualified wages. But remember, we only need to get up to the amount per employee, per quarter, or per employee per year, depending on the year. And most of the time, health insurance isn't going to need to be considered, but you may want that, and it can be treated as wages. We're not sure exactly how because we are waiting for more rules to come out on that. Now, there is a big caveat to this. There's no double dipping. So wages paid with PPP loans or the emergency wages paid under the emergency paid sick leave, of course, those are excluded from this. So how do you get this? Well, Cardinal is going to be sending you a form. If you co-employ with us, we'll be sending you a form electronically with wages paid. Essentially, you're just clicking yes, back out any wages used for PPP loans, forgiveness, sign it electronically, and let Cardinal do the rest. Now, the good news is we have 3 years to file, and Cardinal has to file an amended tax form each time. Now, our tax forms are aggregated into a single large form, and the accounting team, they don't want to do this form potentially a couple thousand times. They advocated for doing it in rounds. And in fact, they threatened me on this point that to make sure we're going to do rounds. So one of the things I really like are the Oreo cookies. You have those Oreo cookies and you can have them for breakfast with your coffee. They're amazing. Well, in the break room, they threatened to take those Oreo cookies and randomly take out the different Oreo cookies, eat the cream center, and replace it with toothpaste and put it back in the box on there. So it's pretty evil. We went ahead and we're going to do it in different rounds. So you remember I said that we back-burnered this, and with good reason, and now we're going to talk about that good reason. So maybe you're part of group number 1 on here. Your PPP loans are forgiven. You already have enough for qualified wages, and hey, Cardinal, just help me get the money for these tax credits here. But maybe you're part of group number 2. You want to or need to include your health insurance costs in there as wages. Maybe you're still trying to figure out your PPP forgiveness on here. And I should note that I can't think of a scenario where you're going to want to use wages for tax credits instead of PPP loan forgiveness. And then finally, we're going to have any of the procrastinators. And I completely get it. We're really busy right now. Everyone seems to be. Cardinal's going to help you at a later date. And I should note these timelines, as vague as they are subject to change. We may add in more rounds. So if you have questions, be sure to get a hold of Cardinal and I'll go ahead and give you that information. And we're also going to be posting an FAQ and some different material here in the near future. Thank you for attending. Have a great day, everybody.